Oracle's results just draw a line in the sand between the haves and the have-nots in the AI trade. We were all sitting here last night, digesting the quarter, watching the stock go stratospheric, hitting record highs in the after-hours session, Karen. And here we are. It actually carried through into this session.
It did. It carried through, and it traded as high as, I think, 345. I actually did a put calendar because I just thought, wow, this is just not that it's not deserved. It was a giant, stunning release. But we talked about this last night about the margin on the additional revenue and how, margins will be compressed. The overall dollars of margins, of course, will be much bigger. But it just seemed to me like, wow, this is just a frenzy now to own this stock. And I wouldn't be surprised if, we know that AI is in the early-ish innings, but we also know this is not a linear thing, right? And earlier in the week, there was a story about AI adoption is slowing, which, if we step back and, squint a little, it'll be the tiniest little, nothing little tiny dip. And so I know the overall trajectory, of course, is up and to the right for a while, but this kind of move on a company this size is just, it's enormous. And so would I be short it? No. Right. But to buy some puts, I think the risk reward got crushed, obviously. Right. I thought that was compelling.
Right. But this also comes as we got that great data point from Broadcom with its stock pop. It also moved sharply higher in today's session, like 10% or so.
Yeah, so, we talk about broadening and how that kind of builds confidence for the market. We wanted to see something outside of NVIDIA that really had some sustainable pathway. We called in question whether or not the CapEx spin would continue. And we really felt that it was NVIDIA and everyone else. And perhaps at one point it was AMD that was the second player. Their quarter was a little bit less than stellar. But then, as you mentioned, when you bring in Broadcom and you think about inference and you think about kind of extending out just the data center play, I think, there is a lot of positive there because at the end of the day, since April, this really has been the AI adjacent. You mentioned the utilities that are kind of tertiary plays to that. And I think this does show some sustainability. Karen makes a great point in terms of the slowdown of adoption, but I think that the change in the rate of adoption does not necessarily mean that the target addressable market is significantly lower. So as long as I think we see continued spend on data center, and to Oracle's point, I think a reason why you see a company this large have this size of outsized move is because, keep in mind, the CapEx spend and the free cash flow that they were foregoing in order to get into this market. And so I think what you're seeing is somewhat of a follow through, some confidence in that spend, and some broadening out from the one name that really has been at the center of this whole thing.
Do you remember the quarter when NVIDIA said revenues were going to jump by,
yes,
it was like $9 billion
from 7
surplus.
to 11.
Yeah,
right.
It was a crazy guide higher.
Stunning.
And it's sort of like what we saw in Oracle yesterday, where the guidance was just so strong, you rethink how you view this company, and you rethink this company's trajectory and place in the AI trade.
Yeah, it almost seems like it's an error, right? It's like that big of a move.
Right.
You have to double check and say, did I read that correctly? But this company, if this is in fact accurate, and it is, this is what they're reporting, this demand is huge. I think the question is, we actually had a guest here yesterday who brought up a good point, that can they meet the demand? At some point, is there chip constraints or energy constraints to this kind of demand that they're seeing? But the demand is absolutely there. When you're looking at where investors are pricing this right now, it's now trading about 45, 46 times forward earnings, which is much more than Microsoft and Amazon, which are both in the low 30s right now. So, this just completely popped. People are really trying to jump into this trade here. And CapEx is something to take a look at. They were spending under $2 billion in 2020 on CapEx. It's going to be $35 billion in fiscal year 2026. So, I think the question is, at what sort of profitability, and is there going to be any sort of constraints to this? But the AI trade clearly is not over, and I think that's what you're seeing with this sort of demand.
Yeah.